Hello and welcome to the introduction of corporate accounting practices and accounting standards. This is one of the electives from accounting and finance areas which will be offered to you in the fourth term in your second year. And here I'll make an effort to briefly present the content of this course, my expectation and the process in which we will take this course forward. In this course, there is an expectation that you have a good understanding of financial statements and also the computation of cost of capital. And both these aspects you might have gone through in your financial accounting, which is called financial reporting analysis, and the financial management. During this course, we'll try to cover accounting standards issued by the Institute of Chartered Accountants. That will be the focus. And Ind accounting standard, which are popularly known as Ind AS, which are called converged with IFRS. And as and when required, we'll compare the Indian standards with IFRS. So therefore, the focus is the accounting standards which are being used in India as of now. The objective of the course is to understand certain issues in business management and their accounting treatment. So instead of just getting through each and every accounting standard, we will try to pick up an accounting issue or a business issue and try to understand the accounting aspects of that. We'll understand the relevant principles of those accounting standards, and also we'll make an effort to understand the difference between the Indian accounting standards and IFRS as and where required. But however, the focus is to critically examine some of the important accounting standards based on some specific managerial and business issues. We'll start our class with this particular question: why is a cash from operation not same as PAT? In the process, we will try to understand and recap the interrelationship between financial statement. So first two sessions you're going to have an intensive discussion on cash from operation and why is it not same as profit after tax, and variations of cash flow measures which one can see in the financial statement. In the process, we'll revisit the accounting standard 3 and IFRS 7, which is also called IS 7. The entire course is more an issue based, so we'll pick up certain specific issues and understand the relevant accounting standards. For example, asset accounting will see lease versus hire purchase. There are relevant accounting standards for leasing. We'll see the treatment of foreign currency transactions and foreign currency translations. In those sessions, we'll understand the recognition, subsequent recognition, and the profits and gains from the foreign currency transactions, which may affect the bottom line of several companies. Companies like Reliance, Mahindra Mahindra, Suzlon, Infosys, a big chunk of their balance sheet is exposed to currency fluctuations. So there is a need to understand how are these foreign currency transactions treated in the financial accounting. One of the important changes that we see now in Indian accounting system is the discussion around the accounting for financial instruments, and that is a major contribution of IFRS 2. So IFRS and Ind AS and even AS actually started talking about extensively on financial instruments, accounting for debt instruments, accounting for equity instrument, and accounting for hybrid instrument, which have the features of both debt and equity. In the process, we'll also try to touch and get into the details of the accounting for derivative instruments, and also end this particular aspect by discussing hedge accounting or accounting for hedging. Why companies do hedging is a financial management question. But once you do hedging, how will hedging affect or will be reflected in the financial statements is the focus of our class. We'll also have a discussion on equity-based payments, and under that particularly our focus will be on employee stock options and employee purchase, the stock purchase schemes of different companies. The treatment of ESOPs will be the focus of these classes. Corporate restructuring, or you call it mergers, acquisitions, demergers, capital reduction, stock buyback. So these are very important managerial corporate finance decisions. But once a company takes these decisions on mergers, acquisitions or capital reduction, how are they reflected in the financial statement? So there are several accounting standards relevant to these corporate restructuring issues. So we will have discussion of the accounting standard 14 and accounting standard 21 on this. In the process, once we do the corporate restructuring, we end up with something called groups or a group company. So therefore we have consolidated financial statements. There our focus will be to understand goodwill, minority interest and the consolidated financial statements. And while doing this, we'll also touch upon the value of reporting of intangible assets as mentioned in the accounting standards. And throughout the course, our discussion, our proceedings will be by using the relevant accounting standards, by using some textbook material which may be available on our library, and also the relevant cases. Some of the cases which are popular in this course are relating to depreciation, the accounting for iPhone and an Apple, which is a very popular case relating to the revenue accounting, Microsoft's overall financial reporting strategy, foreign exchange hedging strategies of GM, and you'll understand the accounting fraud at WorldCom, and the Ford Motors accounting for deferred taxes. So these are some of the cases. The list is not exhaustive, the list is inclusive. We may pick up some more cases as we move along. So therefore, during the course you will have, or you are required to get into the accounting standards, definitely get into the annual reports of some or several companies, read some relevant literature or cases or the articles which I'll keep on uploading on this particular site. All our discussions will happen through this site, which we call the accounting, the site for our course is will be there in a Google site. I'm not able to open now. And in case you have any doubts, any questions on this course, please feel free to send me a mail, or you can also give me a call on this so that you can understand the course expectations, coverage, and the books required and the relevant material required for going through this course. But as a prerequisite, I would suggest that you maybe go back to your FR and FSA course, just recap your financial statements, and if you all want, you can also send me a mail. Some of the relevant videos I will send it to you. Thank you very much. See you in the class.